So what do investors want? What are they looking for when you pitch? Well, it's not always what you think. Obviously, yeah, they're looking to make a return on their investment, but what is it that's going to trigger their interest to have another meeting or maybe even invest? Well, one, the most important is the idea that they're betting on the jockey, not the horse. What does that mean? Well, yes, they care about the horse, which is your business idea and what your plan is, but they're more interested in the jockey, which is you as the founding team and your managing team. They want to know that you're the right team to do it. Because in a startup, the horse changes regularly, by the way. Rarely does your original idea what comes out at the end. So what they want to have the confidence is you as a team are the ones that are going to be smart enough to know when should we adapt or when should we be patient and really push our business model and try to prove it. They really want a clear pain and solution. If you can't really clearly identify the pain in the market, then how are you going to target your market? You may be able to identify it numerically and all demographically, but if you can't really say this is a pain and I know people have it and here's why I can prove that, then you have a big issue. And then if your solution isn't clear, maybe you haven't thought through your idea deep enough to explain it in that detail, then you need to go back to the drawing board and rework on it, because the clear pain and solution is when it can open the door or close it during your pitches or even just when you send it out. Third, they're going to be looking for market potential, which is how big can this company be? Now, if you have a company that needs to raise $5 million, you're going to need to have a big exit for them, over $50 million merger and acquisition or IPO, for them to get a return on investment what they expect, that 10x multiple. And really they're looking for the 100x multiple. They're looking for the next Facebook. Let's get real. Now, they know not all their investments are, and some VCs do look at deals. They know if we can get this to 25 or 50 million, we can get a merger and acquisition, out of it that's 3 times X or 5 times X. But really, what they want is to walk in and go, we have the next big thing. Here's why, and you should get on it. You don't want to miss this opportunity. That's where the sell comes into it, is that it's such a great idea, they don't want to miss it and have someone else get on it. No VC wants to be the guy who passed on Facebook or passed on Twitter, and almost all of them have passed on a big deal in the past. Lastly, investors are looking for executability. What is that? That is that there's a clear logical path and you're the right team to execute on this plan. If there's a lot of big behavioral changes you require out of the market, if you only have one customer you sell and if they don't buy, you're out of business, the risk level goes much higher and the executability of this plan goes down. What creates value in a company is executing your business plan, not your idea, and actually not even your technology. You can have the best patents in the world, but if you can't get them in the market and get people buying them, you haven't executed the business plan. So these 4 key points are what you should focus on when you're looking to sell your idea and really tell the story to investors.